everybody. Welcome back to Midas Letter Live. I'm here with my good friend and co-host, Mr. Edward Milewski. Ed, how are you doing today?
I'm doing very well, James.
You're looking fabulous. Just fabulous.
Thank you very much.
Now, Ed, it's been quite some time since we've had this meeting of the minds that, a lot of our viewers rely upon for our scintillating wit and intelligence.
What's happened in the last 6 months?
Well, this is why we decided we should do a show, I think. Let's start with our favorite topic of the day, Sam Bankman-Fried and the implosion of FTX, which we've been covering somewhat extensively on Midas Letter. Now, the questions surrounding Sam Bankman-Fried, Barbara Fried, his mother, Joseph Bankman, his father, now that it's been revealed that they actually bought $127 million worth of Bahamian real estate in the last 2 years.
Just all of a sudden?
Well, over the last 2 years.
They thought now was a good time.
Well, and they're both professors at Stanford.
So where did the money come from?
She's the head of a pro bono advisory group that tells wealthy donors how to deploy their capital into the political system as donations. So it's not a PAC, a political action committee, which means it doesn't have to report.
Right.
So she is the head of this group called Mind the Gap, which is completely democratically oriented. And as we know, Sam Bankman-Fried was the largest donor to the Democratic Party after George Soros, having given
40 million or something like that?
40 to 50. I mean, the numbers are all over the place in the media, so it's hard to know without actually scrutinizing the reporting on the donations, which I haven't done. Have you done that? No. So let's just gloss that over. But the question is, with all of this money missing from FTX, and with Sam Bankman-Fried's parents buying real estate to the tune of $127 million, does that not imply, correct me if I'm wrong, does that not imply that they were duplicitous in the defrauding of FTX investors because they actively deployed capital that didn't belong to them, didn't belong to FTX, and so there we have it. Now we've got
Are they earning like directors' fees and stuff like that? Shouldn't that?
They're not directors of FTX, no. Joseph Bankman.
Yes.
He is.
These are law professors.
They're law professors.
So they know, but they would know the rules, right?
So Joseph Bankman is a law professor specializing in advising the government on how to collect more taxes from companies that are seeking to offshore their income. So it's surmised that Mr. Bankman,
he would know how to circumvent the system.
It is suggested.
Anybody would.
It was suggested that he's the guy who actually set up the corporate structures with over 120 companies in various jurisdictions, and probably a pretty strong argument as to why they're domiciled in the Bahamas.
Right.
Also,
but it's all over the world too, right? There's a
FTX in every country that will have them. There's apparently not one in China. But, there's different approaches to crypto in every country. But anyways, let's not dwell on it. So
this has got to put a crack into the whole crypto world.
Well, this is the thing. We published today on MidasLetter.com an article that basically looks at what could be happening next. And so let's just pull up that article, just so we can give our audience some context on this. And so who else is teetering in crypto land is the title of today's article.
There's a few other rumblings now about other companies.
Well, so you know who DCG is? Digital Currency Group? Digital Currency Group is the largest crypto asset holder in the world. Digital Currency Group is the owner of Genesis, which is now engaged Moelis & Company out of New York, investment bank, to recommend possible alternatives to the current situation. They own Grayscale, which has paused redemptions and is essentially suspected to be in trouble and will not participate in the proof of reserves that is being thrown about as how we prove that we're still doing stuff properly.
Sounds like you're conjuring up a dog's breakfast here. Like,
Well, so the day before I wrote an article, or Monday I think it was, on Binance. So Binance...
that's finance with a B.
So Binance published a preliminary proof of reserves, which is basically a report by the internal group, not audited, not external, wherein they basically said, here's what we've got. And they've got, a ton of Bitcoin, they've got a ton of this, a ton of that. But 30+% of the holdings was their own token, their own proprietary token, which, just like FTX printed FTT, their proprietary token, they can just print out of thin air at will, and there's no...
So it's just like the government.
Kind of like the Fed. Yeah, kind of like the Fed. With the main difference being...
See, we're uncovering the layers, the onion layers here.
It is an onion, isn't it? Yeah, but the case, here's the main differentiator between the Fed and other central banks versus cryptocurrencies. The Fed prints money, and it is arguably backed by the faith and credit of the U.S. financial system. In other words, the government. In other words, all of the possessions of the government, all of the assets of the government, the incoming tax base, the gold that they have supposedly still in Fort Knox, so that hasn't been audited in quite a number of years. And so this is the thing. It's like, well, yes, you're doing, in crypto land, they're doing exactly what the central banks are doing, with the main exception that there's no government backstopping of the assets. So if we look back to MF Global, which was a commodities derivatives trading firm run by John Corzine, who was the former...
I remember that story.
He was the former governor of the great state of New Jersey and a senator.
He was involved in this commodity thing.
$600+ million of depositors' funds were misappropriated to try to stem the tide of...
It seemed like a crazy amount of money at the time, but I guess it's all relative, right?
Well... Bottom line is nobody went to jail. All of the depositors were made 92% whole through various government lawsuits and asset captures, etc.
Okay, so people got back to...
Right.
Yeah, okay.
But so that's the difference between an enterprise that's registered with the government and regulated by an agency. That, in that case, was the CFTC because it's commodities derivatives. But... there was a process, a government process, to make whole the investors who lost their money because it was a government-sanctioned and regulated enterprise. And this is why, on the one hand, crypto advocates in one camp are completely against regulation and saying the whole point of it being decentralized is that it doesn't need regulation. While on the other hand, even our good friend Kevin O'Leary, Mr. Wonderful himself, who was a paid spokesperson.
I heard him say this is the one area where he couldn't get hurt. Like he was convinced this was...
Well, this is the problem with being a celebrity spokesperson. This is the problem with being a celebrity spokesperson, is that you are being paid for your opinion, and your opinion has to be positive. They're not going to pay you for a negative opinion.
Right.
So...
Do they ask the opinion before they hire him, or do they hire him first?
No. They just say, would you be available to be a spokesperson for FTX? The implication is that it's all going to be roses, because obviously they're not going to keep you around if you're bad-mouthing the thing.
Probably a select number of people got slapped pretty good on this one.
On which? The FTX?
Yeah.
Well, they're...
Like certain high-profile people probably got...
They released a list of the top 50 creditors without naming them. So they released a list of the positions without naming who the positions belong to.
The amounts were quite...
Well, they totaled, what was it? $1.8 billion.
Okay. Nice little...
Yeah. So...
I could use $1.8 billion right now.
I could use 1/10 of that. Or 1/100th of that would actually be helpful. Especially since now that crypto, like this whole episode, looking
it's
back...
It's got to hurt other areas too, doesn't it?
Look at the whole year in crypto. Celsius went bust. Three Arrows Capital went bust. Luna, Terra and Luna went belly up-ish.
Does the word bubble...
Well, a bubble is, yes, of course.
It's bursting. The bubble is bursting.
The bubble is bursting in slow motion.
Bubble. And, they always drag it out longer, and there's a lot of people that want this to keep working.
Yeah.
But it's going to be harder and harder as people lose more and more money.
Well, this is the thing. Now, Bitcoin, look at this chart.
Yeah.
It has obviously taken it on the chin.
Yeah, you see, I look at that, I see, major double top, I see an attempt. This is a distribution. This is not good long term, I got to tell you. Now, if it were to turn around and break out, sure, all of a sudden, it's better. But right now, it looks like
dog's breakfast.
Doo-doo.
Yes.
Doo-doo.
Cock-a-doo-doo.
Yeah. No, that's not a good looking chart. And then you get into this area and down in here.
Let me try something
the
here.
The movements are...
oh, that didn't work.
And you notice that the range of movement is much less now. Look at all those candles, those major moves. No more major moves. Now it moves $100,
Let's
$200.
see if we can do this. So, yeah, a lot of people have lost a lot of money, and this is all, this right here, if we zoom in here, this is the actual FTX collapse event from November 10th.
Yeah. No, it was looking like it was starting to make a move, if you think about it, and then it hit that, and then the news started to filter out, and then...
Yeah. So there's a lot of money lost, and right now you have, basically treading water, right? Nobody is buying much of anything. Do you know the entire market cap of all cryptos is now below 800 billion? Which is down.
No.
Yep. Yep.
800 billion.
Down below 800 billion.
It's probably, 3 trillion at one point.
Yeah. So
see, that's all a technician would need to know to say, party's over.
Well,
there's too much on top that can't ever get their money back.
There are a lot of influencers out there suggesting, influencers, I say not analysts, influencers, who are saying, oh, this is the bottom's at 14,000. Oh, there's going to be a bottom at 10,000.
Wishful thinking by the young.
Yes, I think so. Which, is, again, as per the article that we published back in 2013, wherein the title speaks for itself, Bitcoin, paradigm shift or Ponzi scheme.
We talked about it at length.
Ed, we've been talking about this for over a decade. I've seen some influencers out there saying, oh, I warned you back in 2020 about this. It's like, 2020? That's too late.
Yeah.
But, the bottom line is, and a lot of guys are going to point to this, is that a lot of money was made on the way up. But the problem is, most of these young fellows who made a lot of money redeployed it. Their idea of diversification is buying other cryptos.
I know.
So
No.
you don't really get to take money off the table.
There was $2 trillion of value there, and now it's gone. And in the stock market, there's probably another 10 trillion. And then in real estate and in the bond market, when you add it all up, the balloon, which was like this, is now like that.
Yeah.
So everybody's got to try and steal more from their neighbor to make up for it. So it's more of a dog-eat-dog, whatever. It's just there's less to deploy.
Yeah. Yeah. So, anyways, that's in crypto. There's a lot more pain coming. We feel that
every time one of these crypto companies goes, it breaks Bitcoin worth a little less.
Yeah. So you got to keep your eye on the big the big centralized exchanges like Binance. Bitfinex is under SEC scrutiny, and certainly the entire range of crypto exchanges is, there's a general abdication of faith and trust in this system right now.
You know what? The shit that looks like it's going to get poured on us is hard to imagine.
Yes. We interrupt this regularly scheduled broadcast to bring you a note from our sponsor. Tembo Gold is a company that's exploring for gold in Tanzania right next to Barrick's Bulyanhulu mine, and they in fact have quite a tight relationship with Barrick. Barrick bought 9% of the company back. You
always want to see a major company.
That's right.
Interested now, because if there's money needed, they're sitting there with deep, deep pockets.
That's right. Drilling is underway.
Very important.
They've got technical expertise being input from Barrick's technical staff on the ground. David Scott, who's the CEO of Tembo, was the former mine operations manager for the Bulyanhulu mine. And so there's a very tight relationship there. Anyways, if you want to learn more about Tembo Gold, check it out at tembogold.midasletter.com. Full disclosure, we are a compensated agency of record on the marketing front for Tembo Gold, so there you have it. Now, let's turn our attention to some of the other stocks that we were talking about earlier this year. I mean, it's not really a stroke of genius at this point to say, hey, we predicted everything was going to go off the rails last year in 2022, and in 2022, everything has gone off the rails. Let's pull up a chart right now of some FANG.
It's all happened in a year.
Yeah.
It's all happened a year ago was the peak.
So here's
Amazing.
the FANG stocks.
The Jeepers Creepers.
Yeah, it was 1 year ago today that NASDAQ was at its all-time high, right?
Yeah, yeah.
So here's the FANG stocks. You know, bit of a rally in October.
Was that ARC? No.
No, this is the FANG stocks. So this is a basket of
A basket
of futures.
Okay.
Futures basket that consists of Facebook, Netflix, Amazon, Apple,
Right.
and Google.
Right.
So those are the FANG stocks. So, and generally we've seen all of these companies come off, and that was more or less what was predicted by you and I back in, I think, November. Well, it was October.
Well, we were talking about Amazon looked very toppy, double topped, and we talked about all these different things. Interest rates were rising, and voila,
Yeah.
20%, 25% off the NASDAQ, I think, something like that, from 15 and change to.
Yeah. But a good place to start is a look at the U.S. government 10-year. And it's interesting to me that it's actually had this downturn.
Well, yeah, but you look, top, and then a test, fail, So, yeah, the trend right now is sideways down.
Mm-hmm. So in the individual commodities, though, here's what's interesting is Goldman Sachs came out and said that they expected that in 2023, the supply of lithium would start to meet the demand.
Really?
Yeah, in an effort to drive the price of lithium lower and take the wind out of lithium stocks, because as we often say, Goldman Sachs is one of the principal market manipulators in global markets. And
Sure.
when Goldman Sachs speaks, people tend to listen and just say, you know what? I don't care about...
So what? Let's see, what's lithium been doing?
Well, so here's lithium. Higher than ever.
Can't stop.
No. Why? Because demand is nowhere near getting satisfied by the supply looking out even 5 years.
So why would Goldman Sachs say that?
Obviously because they want to drive the price lower.
So they can buy it.
Well, maybe they're covering a short.
Maybe they better hurry up and cover it.
Maybe this is now a short squeeze.
Ooh.
So here's a list of the lithium stocks.
Right.
Clearly, this is, in response to, this is Albemarle, one of the largest lithium producers in the world, which we actually first recommended back in 2014, I believe it was, at $70 it was trading at. Anyway, so if you would have listened to us then, you'd be loving us. Lithium South, this is a junior that's...
Yeah, it's gone south.
It's gone south. That's a lithium contract. IBAT, this is a company that has a direct lithium extraction technology run by Dr. John Burr. But if you want to find out more about this company, he was a guest on our show quite recently. And you can just go search our YouTube channel for that or on midasletter.com. But these guys are deploying...
Interestingly, the stocks aren't really following the commodity step to step, right? Like they're not all at their highs.
Well, it's important, if you're going to measure the effect of the commodity on the stock, it better be a producer of the commodity. These companies are not actively producing.
Okay.
If we want to look at, this is one of my favorite stocks in the production category, Lithium Americas, who also is in pursuit of direct lithium extraction technology, but is also producing lithium. So this is the effect of Goldman Sachs bad-mouthing lithium stocks.
Yeah.
This is the effect of the commodity price of lithium counteracting Goldman Sachs and saying to the market, Goldman Sachs is full of caca-doo-doo. The price of lithium is rising because demand is not going to be
So
met.
in the battery space, James, you know a lot more about this than I do. what are the most important metals? Is it lithium number one? Is nickel number two?
Well, volumetrically, there's a great deal more graphite in a lithium-ion battery.
Right.
Like, I think it's 20 times more. So there's more graphite in it. But graphite is a lot more easy to produce in excess, and so you don't see graphite stocks really doing that well. But lithium, nickel, cobalt. Now, increasingly,
And copper.
well, copper is not really part of the battery so much as it is part of the distribution of power produced by the
Right.
battery or stored
Right.
by the battery.
Right.
So yeah, but electric vehicles
Right.
have
Right.
an exponentially greater amount of copper in them than do conventional vehicles, which should point to a higher copper price. Which
And copper is not really, I mean, it's 370, 365 or something like that. It hit 5 briefly in the craziness of COVID.
yeah.
And, it's
Well, this is the interesting thing.
like lumber. Look at where lumber is.
Sticking to our commodities theme. So look at the price of copper. Touched a high of 393.
Yeah, that was about 4 or 5 weeks ago.
Yeah. And now it's backed off to the 360 range. Looks like it's having a bit of consolidation there. But yeah, this is the run up. Now,
Well, with higher rates and, like people lost a lot of money, people don't feel as, they don't feel as, there's not as much bravado when they go to the shop.
copper is always battling
Yeah.
the forces of supply and demand at the most, like in many metals, that battle is superficial because the futures market tends to create price distortion relative to value based on supply and demand metrics. In the case of copper really responds to headline indicators of demand and supply. And so recently we've seen, the Chilean Codelco labor unrest sort of rearing its ugly head. Chinese economy going into a negative perception globally because of the increased lockdowns as a result of spreading COVID again and their zero COVID policy. So this is the thing. China's the biggest consumer of copper. The price goes down when they start locking down factories. So, but this is the interesting thing about the world we live in is the reactions to headline headwinds, tailwinds, etc., are so instant due to the instantaneous transfer of information now that, whereas markets tended to look out 6 months and tell you what's happening, they've not been able to do that because they've been so wrong on everything from bonds, commodities, stocks, that now the vision of the market has backed right up. So the response of the market, which remember, most markets are 80% algorithmically driven. In other words,
hard to believe.
Well, so
Not hard to believe. I just, where are we going with this?
But it makes sense now. If 80% of the market volume is algorithmically driven, that algorithms would respond much quicker to changes in supply, demand, sentiment than would people. People tend to, think about it, talk about it, meet about it, discuss it with the group. An algorithm doesn't do that. It says if X, then Y.
Yeah.
And so, and this is the fundamental thing why it, as you said before the show started, it's harder to make money now than it used to be. And the reason for that is because as mere mortals, we're incapable of seeing these moves created by algorithms.
I know, it's crazy.
Because this is not fundamentally driven. This is all driven by rumor and hearsay and data points that conflict with each other, and nobody waits for consensus.
The volatility is insane.
Well, the volatility is, exactly, like the volatility is off the charts.
You just wonder if the whole thing's going to blow up.
Well, again, going back to 2008, when I first started Midas Letter, I started writing because I was convinced that the people who I was listening to, which was very much the alternative voices in the financial space, were saying that the government was suppressing the price of gold and it was artificial, and that there was going to be a moment where gold was going to break out, and that actually started to happen in 2002, 2003. Gold broke out of a long slumber down at $220, 180, and took off, and the rest is history. Like, let's pull up our gold chart.
Well, they took off in about, what, 03, 04, or 04.
Yeah. Now, in October,
Was that gold?
central banks, X of the G7, onboarded 400 tons of gold. Now, that was the highest onboarding of gold month among central banks outside of the G7 in a long time. So we're talking the BRICS countries, so Brazil, Russia, and now there's Saudi Arabia is
India.
clamoring, India, and
Yeah.
this is the thing is
Do you
that
think we're getting at the point where everybody's ganging up on the U.S. dollar?
well, there's definitely an East versus West mindset solidifying,
Yes.
much like it did during the era of the Cold War.
Yes.
So sides are being taken, lines are being drawn, and it's very much a geographical case of East versus West. Now, Saudi Arabia is at odds with the United States, who's been a historic ally since the 50s.
Yeah, that was quite a slap that Biden got when he went over there, sort of.
Yeah, well, so this is the thing. The Eastern countries are feeling emboldened because as a group, China, Russia,
I know.
they're much more powerful.
You feel.
Yeah, and a lot of the debt that the U.S. has issued is held by China and Eastern countries. So what's going to happen when they decide to, if they decide to use debt as a geo-economic tool of war, then what can they do? They can just hammer the price of debt down because you can't replace $1 trillion in U.S. debt with a new buyer overnight or in a year even.
Yeah.
So
you're saying it's set up for some real serious.
Well, back to your point, is this thing all going to come apart at the seams? Increasingly, it looks like it. I saw a piece by a Chinese state news agency saying that China was moving from a détente attitude with the rest of the world to a preparation for war in 2023. War with who do you think that might be?
Jesus. Well, you know what? I hate to say it, but there are times I'm glad I'm old. Or older.
Well, I certainly wouldn't want to. I don't envy parents in this era.
You know, it's crazy.
Well, but this is, I mean, to try to pull this all together into a central theme from our Midas Letter perch here,
Yeah.
is that as we've been now saying since 2013, 2012, and you can go search this stuff on midasletter.com, find these articles where we were saying that Bitcoin is a Ponzi scheme, regardless of how beautiful and sublime the programming and the system and the conception of it is, it still requires buyers to make it go up.
And you can only make money if you can sell it at a higher price.
Well, and it can never be legal tender without a government sanction allowing it to be legal tender. And if you look at the DCCPA, which is the Digital Commodity Consumer Protection Act, which is a bill sponsored by a couple of Democratic senators to whom Sam Bankman-Fried was also a large donor. This the draft that was leaked and that's circulating on the net, we published a link to that in one of our articles last week, clearly indicates in the language that at best, if digital commodities are not to be classified as securities, the best they're going to get is commodities. They're never going to be currency. And that language, then this marked up piece of legislature that's sort of in development that we've got a link to on our site, you can see the cross out where they cross out anything that puts any ambiguity between the possibility that any crypto could ever compete with the US dollar as a unit of currency. They strike that language out and they write commodity or something else. So that's the interesting thing about reading this document in progress, is you can see what the intention is on the part of the architects, and that's still lost on the most hardcore Bitcoin enthusiasts. I remember seeing...
and just to say, as we're talking about all this crypto, what's been around longer than anything? Gold and silver.
Gold and silver.
Yeah, and so as all this other stuff gets more and more nebulous, the argument people think, well, maybe I got to put more money over here into the shiny stuff.
Yeah, well, that's just it.
Gold. That's what some people would say. Yeah, but it's a process, right? It's not going to happen overnight.
Well, and there's a lot of aligned interests against gold. The fact that the futures market dominates the trading in gold, and in a paper format, so the volume of gold traded in futures versus what's traded in physical is many times more than there is physical gold available to be traded. So we know that the futures market, which was founded as a price discovery mechanism, has now been massaged and redeployed as a price determination mechanism to keep gold prices from getting out of control. Now, you'll notice that the gold price lately, and let's look at this chart, if you put on here, if we just add Bitcoin, and we look at the relative price action, so look at this. This is directly correlated to the price.
Well, I mean, you see with that big drop,
yeah,
that's when gold gets
right.
Yeah, because people, what else are they going to go put their money in?
Right. So there's been this continuous chorus from the mainstream financial sector and even some of the lesser financial gold enthusiasts, real money enthusiasts, saying, no, Bitcoin is not being viewed as an alternative to gold by anybody. And this is clearly demonstrated to be false. And that's another theme that we've been consistent on over the years, is that yes, Bitcoin is in fact, the Bitcoin advocates who are youthful in nature are in their minds replacing, they would be the gold bugs of the future if Bitcoin wasn't here. And this chart kind of proves it. Every time Bitcoin gets hammered, gold responds with a positive move, especially when it's something scandalous. So here's another very misleading indicator that the forces of market manipulation have clearly learned to master. Like the volatility, this is the VIX volatility index. So this is the fear index. And look how low it is, despite the fact that, look at the S&P, like that's quite volatile.
Well, but we're coming off one. We've had a good run here. Look at
But the trend is definitely downward since January.
Sure, but like you say, this is an instant gratification world. People are looking at the last few.
Right.
It's amazing, right? But they grasp to.
Yeah.
Whatever's convenient.
Well, it always amazes me when people say, oh, this stock made this move in this day. And it's like, who cares what it did in a single day? What is the trend since it began trading? Like where you got to step back and look at the timeline. And this is what is largely absent from the crypto crowd, is they don't look at the timeline in its entirety. They don't consider that in 2013, when I wrote that piece about gold being a Ponzi scheme, Bitcoin had crashed from $283 to $87. And I suggested that this is not the performance of something that can ever be a currency. This is,
I mean, what a run. $64,000 question. Holy smoky.
Well, but that's just it, though. When something inflates in value so fast, you bring up the term bubble. Bitcoin is the mother of all bubbles, next to the U.S. dollar, if you ask me.
Well, look at how much the balance sheet was in 2008, and look at the balance sheet now of the Fed. It's all directly correlated. Like it's 4 times as much money, 4 times bigger NASDAQ.
Yeah.
Like it all, the big money. Look. The money all ends up in the same big pockets, in the same place, in the stock market, the commodity, whatever they.
Well, we have this chart demonstrates that the rise in the Nasdaq, the S&P, the Dow Jones is directly correlated to the infusion of quantitative easing into the system since 2009, when quantitative easing first got started under the guise of the toxic asset relief program.
So that's why. And I'm a stubborn guy. Don't fight the Fed. Don't fight the Fed. Like the Fed.
Well, it's impossible to fight an entity in the financial stage who has the ability to fabricate capital out of thin air in such volume that it is utterly mind-boggling.
Yeah, well, that's what happened. In fact, crypto arose out of the creation of all that friggin' money.
That's just
the folly of that money.
That's just it. And so fundamentally, I support.
With no cost to it. 0 interest rates. Duh.
That's what I support about Bitcoin. Is like it is a good idea. There's no doubt about it.
Yeah.
It's just that you've got to make it the government's idea. Or you've got to defeat
but
the governments of the
you're
G7 before it's ever going to rise above
Right.
USD and
Right.
the British pound and the whole basket of G7 currencies. This is a cartel of countries driven by families who are the longest living capital pools, the Rockefellers, the Rothschilds, the Morgans,
Jesus.
you name it. Yeah. And they've basically had us all by the nuts for the last 100 years. And this is exactly what is driving Bitcoin. But I don't believe Bitcoin is viable in the longer term because it has so much opposition to it.
But aren't you surprised? Oh, no, here's the question. Are you not surprised at how many institution-like entities got involved in this space?
No,
Like,
no, not since
You-
the deregulation hit in the 2000s, where government said, you know what, you invest in whatever you want. So basically they said to the big institutions, whatever you want to invest in, it's up to you. Carpe diem.
Buyer beware.
And
good luck to you.
yeah, no, carpe diem, seize the day, invest in what you
Yeah,
want.
no, but the other one was buyer beware, right?
Yeah, caveat emptor.
Caveat
Caveat emptor. Yes, so no, I'm not surprised because
Yeah,
anything
yeah.
that's volatile,
Yeah.
institutions make money on.
Yeah, yeah.
So they have
got put
supported-
options, they got now, what about the derivative? The derivative thing's starting to make more noise because if
Well, this
things
is the
start
crazy
clicking-
thing. This is the
what-
crazy thing.
that happened to the
It's like the institutions. So the government prints money like crazy. It gets lent to these giant institutions who now create an inflationary pressure on Bitcoin,
Yeah.
which is many times
Yeah.
more impactful than any other commodity or asset class because Bitcoin has this theoretical psychological limit of 21 million, despite the fact it's been forked 4 times and who knows when that'll end. So now there's 84 million versions of just Bitcoin out there, or 84 potential Bitcoins in 4 different flavors. So that argument that there's only going to be 21 million Bitcoin is kind of void. Yes, there's only going to be 21 million of the original Bitcoin. What about Bitcoin
yeah.
Cash, Bitcoin
Yeah,
Gold,
yeah, you're
Bitcoin
totally-
Classic?
Yeah, a lot of people don't follow all this. They just follow the headlines and they think, oh, this is.
Or they follow their favorite crypto that they put some money into and write it up.
You know what? There's a lot of younger people that probably never heard of investing that put money into that space that are going to lose it all.
Yeah.
And that may sour them for a generation.
Oh, well,
Like I'll tell you, that's why. If you put up a chart of the Nasdaq,
Well, let's do that.
like a 20-year chart.
okay, so there's NASDAQ.
Yeah, there you go. Now you might have said this was going to happen here. What? That's Y2K. The 2000
No, that's the .com era right there. This is the .com
Yeah,
era.
Y2K, Y2K.
There's no doubt that the Y2K scam, which is what it became,
Yeah.
was in fact part of the run-up. But
No, but
there were many subsets contributing to this macro move.
and you think,
But it was all .com related.
And I would have said that was a bubble that lasts for a lifetime. But no, they just have to keep printing money, and sooner or later the bubble continues.
How many trillions of dollars have gone into this market?
Look, and you think if you didn't know where it was going to end, you'd say, no, that's the top. And you keep going, and
Right.
that's the top.
Right.
And it just keeps going.
And guys just keep predicting it going
but
higher.
now,
This little yellow arrow here is June of 2021, where we said the Fed is going to reverse course at some point before the end of this year. They did.
Yeah. Yeah.
Inflation
Yeah.
was going
Yeah.
to,
Yeah.
inflation started to erupt here.
we could be, this could be a major, cleansing of the system.
Cleansing.
Like the,
Well, definitely as this east-west thing crystallizes in markets and this competition for the unit of trade moving away from the US dollar and towards this basket of currencies that will not include the US dollar, but will include some gold, and that's why all this gold is moving from west to east. You know, there is a point where the East is definitely in a position to say, that's it, stop the music, we're not going to support this illusion of the US debt. It's not a debt, it's a delinquent, bloated, spent piece of jet trash from the 30s that we are now going to reject, and we're going to launch our own currencies.
It looks like the world that was, you're talking about it financially happening, and it looks like they're now politically it's starting to happen. Like you can see they're moving.
Well, politically, we're at war with Russia proxy through the United States.
They're sending so much into the Ukraine.
China is preparing for war overtly, ramping up the military complex, industrial complex now, where they've surpassed Russia in terms of strength and have been past Russia for quite a number of years.
When things get weak or the markets look thin, they need a war to get the economy going.
Well, there's always a war going, and that's part of the American problem.
Okay.
The corruption of the American ideal.
Will it be a nuclear war?
I don't see a nuclear war because
nobody wins.
Nobody wins, exactly. It's like you contaminate the whole globe.
Unless you're crazy.
Well, like Elon Musk, who thinks he's going to escape to the planet Mars with a select plane load or spaceship load of celebrities or whatever he's thinking. But in our next show, it might actually be looking in the rearview mirror at the collapse of Binance, potentially.
Yeah, and they all got to take their toll on each other, don't they? Like one goes here, it just more water.
So this is the thing. We're at the beginning of this coming apart of the seams of the crypto market. In the courts, XRP is against the SEC, trying to argue right now that XRP and cryptocurrencies are not securities, and nor should they be considered as such. And all of the scuttlebutt in the support of XRP universe thinks they're going to win. They don't understand. The SEC doesn't care about your logic. All the SEC is doing is saying, if we said yes and agreed with them, this would compete with the US dollar, so there's no way that's going to happen. So we'll create 400 pages of gobbledygook arguments for why this is a security, will never be money, and the crypto complex will continue its demise.
Yeah, I got to tell you, do you think the Fed worries about you and I going bankrupt if we invested our money in crypto? Like, they don't care.
You and I, no. In fact, they need a massive wounding of the general investing public to come to them in clamor. Like Kevin O'Leary is a great example. One day after FTX collapses, he's up there looking into the camera and saying, "I demand regulation now." And it's like, gee, Kevin, you think that might be a little rich coming from you after, you've been... Who knows how much he harvested. So this is the other thing, is that he discloses he's a paid spokesperson, doesn't disclose how much or at what rate or for what duration or what other upside he might have been granted, which is increasingly becoming the rule if you're going to accept money. And I know this because we take money from public companies all the time in exchange for exposure to our audience. And as I said...
You were doing this for fun.
Well, mostly. I'm certainly not making any money at it.
Lately we're doing it for fun.
Yeah.
No, look, in a shrinking balloon environment, it's difficult to expand.
Ooh, that is profound shit right there, my man. Ooh.
There you go.
Let's leave the show on that note.
Leave it at that.
And again, our show today has been sponsored by Tembo Gold. Visit us at tembogold.midasletter.com if you want to see the whole kit and caboodle. Follow this story. We're going to have interviews with management coming up next week and some really great news coming. Thank you for watching. We'll see you next time.